Today I will be moving on to the lesson Financial Statements of a Business, which will be the last lesson, which will be the last accounting lesson of grade 11 syllabus. Here we are paying our attention, or at this level, we are expecting to have an idea about the financial statements prepared by a sole proprietorship business or a sole trader business. Let's see, what do you mean by the financial statements of a business? A set of statements or documents prepared by a business during a specific period of time to identify the financial performance of a business is known as the financial statements of a business. Basically, the financial statements prepared by a sole proprietorship business will be two. The first one is the profit or loss statement, and the second one is the statement of financial position. The profit or loss statement will be prepared by a business with an intention of identifying the operational results of a business. So these operational results will be, in simple terms, that is the profit or the loss earned by the business using incomes and expenses of a particular financial year or an accounting period. So the second statement is the statement of financial position, which will be prepared to identify the financial position of the business. That is actually based on the assets, equity and liabilities of a business. We will be discussing them in later. So at the moment, I hope you all get an idea about the main two financial statements prepared by a sole proprietorship business. So in our syllabus, at the O-level examination paper, we are supposed to have an idea what the financial statements are, and also you must be in a position to prepare a set of financial statement consist of profit or loss statement and the statement of financial position. Usually, these financial statements are prepared at the end of an accounting period. So then it's important for you all to have an idea what this accounting period or the financial period is. Before that, what is the importance of these financial statements to a business is also important for us to know. When it comes, there will be many importances. So out of that, the first one, I have select main four importances. The first one will be to see whether the businesses have earned an adequate or a substantial profit during the financial year or the accounting period. The second one will be to provide information to the stakeholders to arrive at their decisions. And the third one will be to compare and contrast financial results of competitive businesses. And the fourth one, as a legal requirement, the Companies Act number 7 of 2007 has made it a legal requirement. Then we'll move on to the next slide. Main objective of every business is to earn a profit. So based on that, they will be preparing these financial statements at the end of a period to see whether they have earned a substantial or an adequate profit to cover up their operations during an accounting period. So therefore, they will be preparing the financial statements at the end of an accounting period. So what is an accounting period or a financial period? This accounting period or the financial period consists of 12 months. It consists of 12 months. Most of you all is getting a wrong impression about these 12 months by with the calendar year, the 12 months which is in the calendar year. So I like to give a brief idea about this accounting period to you all like this. So normally the calendar year will fall from 1st of January to 31st December of every year. But when it comes to the 12 months of this accounting period, it does not mean the calendar year. So if we consider the year of 2020, if a business starts its performances or the business activities on 1st January 2020, they will continue for 12 months and they are supposed to prepare their financial accounts at the end of 31st December 2020, which consists of 12 months. This accounting period or the financial period depends from business to business. So as an example, if a business starts its performances or the business activities on 1st of April 2019, it will go on up to 31st March 2020 of the next year, which also consists of 12 months. 1st of April 2019 to 31st March 2020. So they will start preparing the financial statements on 31st March 2020. As another example, if a business has started the businesses on 1st May 2019, their 12 months will end, or the accounting period or the financial period will be ending on 31st April 2020. Again, which consists of 12 months in between. Likewise, this can be changed from businesses to business. Then, I like to pay your attention here when I'm approaching to this lesson. Before that, I will like to give a review or to do a review of grade 10 accounting syllabus as an approach to this lesson, which will help you to revise your knowledge, revise your accounting knowledge in grade 10, and also to give an idea about the structure of your O-level paper. So when it comes to the lesson of financial statements of a business, in the O-level paper, they will be allocating about 20 marks, nearly 20 marks out of this topic. So you can't think of avoiding this lesson or ignoring this lesson and go for a good result. So always this lesson plays an important role in your O-level syllabus. So when it comes to the paper 1, the question number 35 to 40 will consist of 5 MCQ questions, which they have been allocated 5 marks, which is based on this lesson. Again, when it comes to paper 2, the first compulsory question, there will be sub 10 parts. There are the last few questions, last sub-question 9 and 10, most probably will be from this lesson again. You will need the knowledge of this lesson. And again, question number 7 is in the accounting paper, accounting part in the second paper. Question number 7 is fully consists of this question, this topic actually, which will able you to earn 10 full marks. Again, there will be some accounting questions, which is in question number 5 of the accounting section, which will helpful for you to earn some more marks. So thereby, actually the paper has allocated nearly 20 marks or more than that from this lesson. So therefore, when I'm going to do a review or a brief to give a brief idea about the grade 10 work will definitely help us to process on this lesson. Okay, then thereby in grade 10 book, lesson number 4, the first paragraph will consist of what is accounting? What do you mean by accounting? Actually, the process of providing necessary information to the stakeholders or interested parties to arrive at their decision-making process is known as accounting. So it's a process. So the stakeholders are waiting to make their decisions based on these financial statements. So as you all know, a process will consist of inputs, process, and an output. Here, the process of accounting also consists of these 3 parts. Here, the inputs will be the transactions and events which you can measure in terms of money. The steps of accounting will be the grade 10 accounting topics that you all have learned, which I will be explaining to you in my next slide. The output will be the financial statements that we are basically going to learn in this lesson. Okay. This is the diagram which will help you to identify the steps of accounting. The first step will be recording the transactions in the relevant prime entry books using source documents. The second step, posting them to the relevant ledger accounts and balancing them. Step 3, preparing the trial balance. Fourth one, doing necessary adjustments. And the last one, or the final, or the fifth step will be the preparation of financial statements. So, the first step, recording the transactions in the relevant prime entry books using source documents. That's the first accounting lesson in your syllabus. Posting them to the relevant ledger accounts and balancing them. Again, you all have done in grade 10. Preparing the trial balance, also you have done in grade 10. Doing necessary adjustments and the preparation of financial statements will be done under this lesson. So I would like to give you a brief idea about these 3 stages. Recording the transaction in the relevant prime entry books using source documents. Under that, you all have learned 6 prime entry books. You all have learned 6 prime entry books in grade 10. And they will be the cash book, the petty cash book, the bank account, sales journal, purchasers journal, and the general journal. When we are recording the transactions of a business, we will group them under each of these 6 prime entry books. So based on the type of transaction, we will be recording all the transactions using cash in the cash book, and cash transactions which are small in value, which are frequently occurred in a business, will be recorded in the petty cash book. All the transactions in terms of checks again will be recorded in the bank account. All credit sales will be recorded in the sales journal. All credit purchases will be recorded in the purchases journal. So finally, all other transactions which we have not recorded in all these 5 prime entry books will be recorded in the prime entry book called the general journal. So like that, there will be 6 prime entry books and different transactions will be recorded in them. After that, the second step of accounting will start. Then after recording the transactions in prime entry books, at the end of the period, we will be posting the necessary transactions to the ledger accounts. So under that, we have remembered 5 types of accounts, and we are recording them in the relevant ledger accounts using the double entry principle, which you all have learned in grade 10. So what are these types of accounts? Assets account, expenses, capital or equity, incomes and liabilities. So if it's an increase of assets and expenses, always we'll be debiting the ledger accounts. If it's a credit or a decrease, if it's a decrease, we will be crediting the relevant ledger accounts. That is when it comes to assets and expenses. So we are giving the same treatment for assets and expenses accounts. So when it comes to equity, incomes and liabilities, again, if it's an increase of them, we will be recording them in the credit side of the account. And if it's a decrease, we'll be recording them in the debit side of the relevant account. So this has been done, or the second step of accounting will be performed based on the double entry principle. So the third one will be, now I think you all have a good idea and an understanding about the first 2 steps. Then we'll move on to the third step, which you all have done in grade 10. That is the preparing of the trial balance. So what is the trial balance? The trial balance is merely a statement. It's not an account. A trial balance is merely a statement, consists of balances at a particular time period or at a particular point, which shows the mathematical accuracy of the accounts of the business. So the debit side, there will be 2 sides in the trial balance, debit and the credit. In the debit side, we will be including the balances of assets and expenses. And on the credit side, we will be including the balances of equity, incomes, and the liabilities. So normally, if you have done the accounting, if you have properly recorded the transactions under the principles of accounting, at the end of the period or any particular time that you are preparing a trial balance, it should be tally. That means it should be equal to the debit side of the balances of the trial balance to the credit side of the balances. That means the debit side should be equal to the credit side of the trial balance. Okay, so the adjustments and the preparation of financial statements, we will be doing in the next few lessons of mine. And I hope that you will join in the next few lessons of mine to get a good understanding of the other part of the lesson. Thank you.